Hey there, business owners and entrepreneurs. Ever stood outside a bank, clutching your business plan, with that sinking feeling they're going to stamp a big red "denied" on your loan application? You're not alone. In fact, banks reject around 80% of small business loan applications. But what if I told you there's a whole world of funding possibilities that doesn't involve begging traditional lenders for money? Alternative funding, your business's secret weapon. Today, we're diving into the game-changing benefits of alternative funding and why it might be exactly what your business needs to thrive. Point 1. Accessibility. Let's face it, traditional loans can feel like trying to get into an exclusive club where you don't know the secret password. Bad credit? Limited business history? No collateral? Sorry, you're not getting past the velvet rope. Alternative funding flips this model on its head. Whether it's crowdfunding, peer-to-peer lending, or revenue-based financing, these options often look beyond just your credit score. Take crowdfunding platforms. They care more about your idea and how you present it than your FICO score. Or consider revenue-based financing, where lenders look at your business performance rather than your personal financial history. Point 2. Speed and flexibility. Traditional bank loans? Get comfortable waiting. The average time from application to funding can be 3 to 6 months. But in the business world, opportunities don't wait. Alternative funding sources can get you capital in days, not months. With options like merchant cash advances or online lenders, you could apply today and have funds tomorrow. And unlike rigid bank loans, many alternative funding options offer flexible repayment terms that work with your business cycles, not against them. Point 3. No collateral needed. So, what are you willing to lose if your business fails? Not exactly the most encouraging question, right? Traditional loans often require you to pledge your home, car, or firstborn child as collateral. Okay, maybe not your child, but you get the point. Many alternative funding options are unsecured, meaning you don't need to put your personal assets on the line. Equity crowdfunding exchanges ownership stakes instead of demanding collateral. Invoice financing uses your outstanding invoices as security. Your home stays safely in your name. Point 4. Specialized for your industry. Traditional loans take a one-size-fits-all approach. But your vintage record store, tech startup, or organic farm? They have unique needs and challenges. Alternative funding sources often specialize in specific industries. They understand the rhythms of your business and can structure funding that makes sense. There are film production-specific funding platforms, agriculture-focused lenders, and tech-oriented venture capital firms. These specialized funders bring not just money, but valuable industry connections and expertise. Point 5. Building community. Perhaps the most overlooked benefit of certain alternative funding methods is community building. When you crowdfund or seek peer-to-peer lending, you're not just raising capital, you're creating brand ambassadors. Each investor or contributor becomes personally invested in your success. They share your business with their networks, provide feedback, and become your most loyal customers. Try getting that from your bank loan officer. Conclusion. Alternative funding isn't just a plan B when banks say no. For many businesses, it's becoming the smarter first choice. With greater accessibility, speed, flexibility, and the potential to build a community around your brand, these funding options are revolutionizing how businesses grow. Every business's financial needs are different, and the right funding solution depends on your specific situation. But knowing all your options? That's just smart business. If you found this helpful, please hit that like button and subscribe for more business growth strategies. Drop a comment below telling me which alternative funding option sounds most interesting to you, or share your own funding experience. And if you want to dive deeper into specific alternative funding methods, check out my detailed guide linked in the description below. Until next time, remember, funding roadblocks are just detours to better opportunities.